The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk. I'm Steve Sedgwick and these are your headlines. Nissan and Honda going official with their merger talks in a deal that will create the world's third largest automaker with 30 trillion yen in sales. Volkswagen shares hover around the flat line actually, despite the German automaker striking a deal with labour unions over the 4 billion euros worth of savings annually and averting further strikes. Aviva is set to take over smaller rival Direct Line in a deal worth £3.7 billion, with the merger set to create the UK's largest home and motor insurer. And US futures pointing higher as traders gear up for a holiday-shortened week for some, whilst President-elect Donald Trump takes the spotlight, as ever, with a threat to seek US ownership of the Panama Canal.
The fees being charged by Panama are ridiculous, highly unfair. This complete rip-off of our country will immediately stop. It's going to stop.
Right, let's take another look at these markets. And once again, Europe cannot find a bid. You've got a bid in the UK with Aviva and Direct Line. You've got Volkswagen looking like it's got some form of deal to take out some form of capacity. You've got Nissan and Honda talking about a deal to take out even more capacity. So you thought there might be something there for the European automakers. And across the board, it is a nightmare to try and get impossible to try and get a firm bid on the European market. I mentioned Yoshida-san. I'll just give you one or two of his flashes, actually. My job is to carry out turnaround plan, return to profit, and position Nissan for an integration with Honda. Deal with Honda doesn't mean we can't make turnaround by ourselves, but it's a complementary collaboration to raise competitiveness. Absolutely. Right, let's have a look at the sectors gaining. Have we got any sectors in positive territory? It's going to be hard to find. Healthcare, rallying 1.3%. I wonder if that's a Novo trade. We'll have a look at that in a moment, because Novo Nordisk, what a pummeling it got. And it was very interesting. They showed great efficacy of its latest drug, but it was nowhere near what the market wanted. And ergo, they got punished aggressively. For Novo Nordisk, read Nvidia, read any of these highly valued, amazing growth drivers of 2024. Anyway, let's have a look at the sectors declining. There are a lot of sectors declining today as well. We have travel and leisure down one. I know there's quite so bad travel and leisure. There's a bit of weather over the weekend and Heathrow was his usual mess, but 1.9%. I'm hoping at least one of the London airports is better today when I go up and make my journey to pick someone up. Media down 1.1%. Retail again. Retail is not the most loved sector in the world, as you will know at the moment. And I can see a lot of retail names, even the illustrious ones, under a lot of pressure in that last-minute scramble. I've seen some big sales going on as well. So the hopes of full-price sales at this stage, minimal, I would suggest, 2 days before Christmas. Anyway, let's move on. President-elect Donald Trump says he will demand that the Panama Canal is returned to the United States if shipping rates are not reduced for American vessels. Now, look back at the history of this relationship. It is a very complicated relationship between Panama, the canal owners, the canal builders, and the United States as well. Speaking to supporters in Arizona, Trump repeated his description of the waterway as a, quote, vital national asset. Listen in.
Our Navy and Commerce have been treated in a very unfair and injudicious way. The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete rip-off of our country will immediately stop. It's going to stop. The United States has a big and vested interest in the secure, efficient, and reliable operation of the Panama Canal.
They're not the only ones who use the Panama Canal, in case you were wondering as well. If every nation And again, I appreciate, and you have to look into this. There is a complicated history between Panama, the owners, the builders, and the country, and the United States. Have a look. It's not complicated, but it is complicated, if you know what I mean. And yet, having said that, if every nation who felt they were being overcharged then said, oh, yeah, we might take ownership of it, chaos. Anyway, in response, the Panamanian president, Jose Raul Mulino, dismissed Trump's threat.
Cada metro cuadrado del Canal de Panamá.
Every square metre of the Panama Canal and its surroundings belongs to Panama and will continue to belong to Panama. The sovereignty and independence of our country are non-negotiable.
You want to read a good bit of fiction about it. You've read Le Carré, you lot, haven't you? The Tale of Panama. Have a look at that one. That's all about this and the complicated relationship. Brilliant book for the list for you all. Anyway, Mr. Trump responded to those comments overnight. So it's back and forth, isn't it? Responded to those comments overnight, saying in a post on Truth Social, quote, "We'll see about that." Wow, is that a threat? What's really interesting as well is, for a president who wants to extricate the US and wants a degree of US isolationism, he sure seems quite imperial in some of his conversations. Panama, Greenland? Yeah, the president-elect also used his Truth Social account to suggest he wants Greenland under US control, in part of a post appointing the PayPal co-founder Ken Howery as his ambassador to Denmark. Trump described US ownership as a territory as an absolute necessity, having cancelled a trip to Denmark during his first term when he was told that Greenland was not for sale. It's not for sale. It's not for sale. What if the Mexicans said, oh, we'll have bits of the United States back? What if the Russians said, we'll have bits of the United States back? What if the Spanish said, no, we'll have that? But what if the French said, I didn't like that deal we did a couple hundred years ago, we'll have a bit of that back? Is that too extreme? I don't know. Trump also used his Arizona rally to respond to taunts, suggesting that ex-owner Elon Musk is the real president. Freudian slip for me there as well. He's seeing a lot of copy that says President Musk at the moment as well. Anyway, he didn't like that. He didn't like the taunts as well about Musk being seen as the real power behind the president-elect. Let's see what he said to that.
And all the different hoaxes. And the new one is, President Trump has ceded the presidency to Elon Musk. No, that's not happening. But Elon's done an amazing job. Isn't it nice to have smart people that we can rely on? Right? Don't we want that? He's not going to be president, that I can tell you. And I'm safe. You know why? He can't be. He wasn't born in this country.
I'll never get tired of that. He can't be. He wasn't born in this country. Bad impression. Apologies, Mr. Trump. President-elect Trump says he plans to nominate billionaire investor Steven Feinberg as Deputy Defense Secretary. Feinberg is the co-founder of the private equity group Cerberus Capital Management, which has invested in defense contractors. Excuse me. Mr. Trump also picked former Treasury official Stephen Miran to chair the Council of Economic Advisers. Miran accused the Treasury Department of seeking to manipulate the economy during the election and damaging the fight against inflation through relying on short-term debt issuance. He's also hit out at the Fed Chair Jerome Powell's decision to support large fiscal stimulus during the COVID-19 pandemic. Incoming government efficiency czar and ex-owner Elon Musk, we haven't mentioned him much, has added to the criticism of the Fed, describing the central bank as, quote, absurdly overstaffed in a post early this morning on X. Well, let's get to Matt Ryan, global head of market strategy at Ebury. Matt, going to be another quiet year ahead as well. Do you want to give us your broad brush and with specific notable mention of Trump and the US? It's never all about one thing, but it feels like it is as well. I mean, when I'm off to World Economic Forum in January, I feel that the only question I need to ask all my guests is, Trump? So you tell me what you think.
Well, absolutely. I think that's going to be the big focus for investors in 2025, as you mentioned, is what this second Trump administration will look like. I think the biggest unknown quantity surrounds the tariffs in particular. We know those tariffs are coming, but what we don't know is the extent of those tariffs and what sort of retaliation we might see. I think there's a sort of a general sense that we might see history repeat itself maybe. If we look at 2017, actually we saw a lot of bluster, a lot of threats, not so much action. But actually, if you look at some of the appointments he's made in his cabinet, we know that Trump sees these tariffs as a sort of two-way street. He uses them as a negotiating ploy, but also he sees beyond that. I think that's a big cause for concern for investors, and one of the reasons why we think we see weaker growth next year as a result of these tariffs, particularly in Asia, given his hardline stance.
Let me try and paint a different side of it, Matt, as well, because I understand what you're saying, and we all have concerns about what it means. But actually, if nations around the world have to spend more money to support their industries and actually build up domestic and local capacity because they are concerned about what is being done in the States and getting left behind, for instance, defence. This isn't necessarily a bad thing for markets, for economic activity. If, for instance, we can see the Germans weakening their fiscal rules a degree to spend more money. Actually, some form of galvanised economic activity from China to Berlin, etc., that's not a bad thing for the global economy.
Well, I think there's room there for opportunity. I think there's, possibly these tariffs could lead to some of these countries seeking out alternate trade routes or promoting their domestic production. But these things take time. I think that's a big concern, is that these changes are not going to happen overnight. And if Trump goes big on those tariffs early, that doesn't give countries that much time to sort of to reconfigure and to look at alternatives.
What does it mean? You are head of market strategy. Give us your broad brush on what you're advising your clients to do.
Well, I mean, so we're focusing predominantly on currency markets. So our big focus going into this year is surrounds the Trump administration in particular. We're looking at to what extent is the Trump presidency priced into the value of currencies, particularly when it comes to his tariffs. To what extent are markets bracing for high US inflation, higher Fed rates for longer? We would say to an extent a lot of that is priced in, but there's still some room to go, we think, in this dollar rally in particular. Again, particularly if Trump goes big on the tariffs, particularly if the Fed indicates to markets that actually maybe it's not ready to cut rates at all for the next few months. We think there's a good risk that they could wait at least till mid-2025 to find out more details of what Trump 2.0 will look like, and actually that there is some room potentially for more dollar strength.
It has been a year of progress for the dollar. It's up 6.4% year to date on the dollar index as well. It's been a steady incline rather than a violent incline as well. Is that what you're calling in terms of upside for 2025?
Yes, as I said, I think we've seen most of this Trump impact largely priced in, and markets are now only pricing in, I think it's around 35 basis points of cuts from the Fed next year. So actually, I don't think there's massive room for more dollar strength, but I think there's possibility we see further modest gains, but particularly if we were to see, say, a slowdown in global growth, if the US economy was to continue to power ahead. We've seen some good data out of the labour market this year. If that was to continue into next year, I think there's still reason for dollar upside, but not to the extent that we've seen this year.
In your G10 FX outlook, which you've published pretty recently, where do you see the biggest declines in terms of a currency? Of course, every currency is a pair, but where could you see the most excitement? Because I can't help thinking that all the runes are pointing at an open door for a tough year for the euro.
Yeah, absolutely. I mean, we wouldn't say the euro is not our worst performer for 2025. I think there is plenty of downside there. The recent data, particularly the PMI numbers, have been very poor. The biggest impact of Trump's tariffs on Europe will be weaker growth, we think. The ECB is going to continue to cut rates. But we're looking slightly further afield. We're looking at the New Zealand dollar. I think that's particularly fragile, given how dovish the RBNZ has been, given how closely related they are to the Chinese economy, which is not good news under Trump. The other one, interesting, is actually Canadian dollar. Again, it's one that is, we're looking at those tariff threats by Trump on Canada. That's particularly bad news, given how closely linked that Canada is.
Why has the market not priced that in already?
I think there's a degree to that, of it being priced in, but not fully, because if we look at 2017, of course, Trump had all these threats, and they didn't materialise. And I think there is a degree of the markets expecting that to be the same again this year.
Okay, Matt, we're going to leave it there. I think I'm back on track on my timing, so that's good news. Lovely to see you. Thank you very much indeed for coming into the city to join us today. Really nice to see you. Matt Ryan, who is Global Head of Market Strategy at eBury. Right, the United States Congress has averted a government shutdown. Actually, there was a shutdown. Was it about 10 minutes or so? It was anyway tiny. By passing spending legislation on Saturday, 38 minutes, there we go, 38 minutes after government funding expired at midnight. The Senate passed the bill with bipartisan support in an 85-11 vote. Congress did not include President-elect Trump's demand to raise the debt ceiling or even get rid of it. Remember that one? Meaning that government will need to approve more borrowing by the middle of next year. Coming up on the show, we're going to hear from actor and investor Simu Liu as part of CNBC's Converge coverage. That's coming up next. What's your Christmas movie, everybody? Oh, that, yeah. Elf, surely, yeah? We have a tradition. We always have to watch Elf at Christmas. Christmas Eve, actually, with a curry. The reason I mention that is because we are counting down to our special coverage of CNBC's Converge live event in March. The guest list already looks fantastic. With a look now at Sam Vadas' conversation with Simu Liu. Why do I mention that? Because he has starred in movies including Greta Gerwig's Barbie, but before acting, he worked briefly for Deloitte. Who wouldn't want to be an actor after working for Deloitte? Got a lot of friends there, joking. He's now putting his previous training to good use as a partner in a firm that invests in Asian American and Pacific Islander startups. Well, Sam spoke to him at the Super Return, as opposed to the superhero, see what I did there, Return Asia Summit, and started by asking how he decides which businesses to invest in.
You have to look at the inner workings of the business. Is the founder strong? How's the product? Obviously, all of the things that kind of make a great business. And then for me, in order for me to put my name behind it, I think, I would love for it to be something uplifting or something representative of our community. I have a bit of a business background. I graduated with a degree in finance and accounting, and I worked at Deloitte for a shockingly short amount of time before I was fired. But I think, getting into this world is, first of all, a natural progression for my career. I'm very privileged to be at the position where I'm at. So, naturally being a representative of the community, being someone who's enjoyed some success in Hollywood and has a platform, there is inevitably a question of, well, how are you going to use it? What are you going to uplift? And so, for me, it's also a full circle moment where I get to use some of that business school education and I get to really apply it to, hey, let's uplift some, incredible entrepreneurs who otherwise wouldn't have had the chance.
Having left finance behind to successfully forge a career in Hollywood, Simu has learned a valuable lesson.
I spent maybe the first 22 years of my life trying to live somebody else's definition of success. And what I believed that success was, that was defined by other people. And I think in the process of losing my job and kind of hitting rock bottom, but then ultimately being liberated from that idea, allowed me to define success on my own terms. And I think that's the life lesson, is that success looks and feels different for every single person. And you have to learn to define success on your terms and not what other people and not what society tells you is successful, because that's the easiest way to live a very unfulfilled life where, you just feel like not engaged with who you are or your work, and life's too short.
Just gone down a rabbit hole trying to find out the when there's going to be a sequel, because just saying, was The Legend of Shang-Chi, was that the last decent Marvel film? Just saying for a friend. I think it might have been, wasn't it? It was an excellent movie he was in anyway. Anyway, for more on Converge and our live event, which takes place in Singapore in March, you can scan the QR code on the screen. I'll leave this QR code there for one more second just so you can scan it. And then everyone over 40's got to work out how to scan again. Yeah. Okay, yeah. Go to the camp. No, okay, don't worry. All right, okay, you've done it now. Or you haven't, in which case you're not going to, are you, if it takes any longer. Here is the future. So that's very interesting. We're trading on the flat line, but you can see on the screen there around about 2/3, maybe 3/4 of companies are in negative territory. So a bit more bang for the buck for the stocks that are actually managing to get into the green. Would you like to look at the US futures? They are positive, I believe. Let's have another look. There we go. Nasdaq up 125 points. Right, so let me give you a couple more comments from the Nissan-Honda press conference. What have we got? The Honda CEO, Mibe, we want to maximize shareholder returns with 1 billion share buyback. Okay. Nissan's turnaround is a prerequisite. Media reports could have propagated the view that Honda's bailout of Nissan and our share prices went down, but that is not the case. Well, bailout of each other, isn't it, really? I mean, let's be brutally honest about it. Neither of them are surging at the moment in terms of their sales compared with the Chinese. This is not a rescue of Nissan. That's what Mibe is saying. Ushida, for his part, he says our integration with Honda will create a top-class global automaker with more than 30 trillion yen of sales. I think the biggest difficulty for both of these gentlemen, for Mibe-san and Ushida-san, is convincing people that, for want of a better phrase, this isn't two drunks propping each other up. You know, global consolidation is great, but you still need a product that can compete with the best in class. And the best in class at the moment, and certainly in terms of sales growth, appears to be either, let's say, Tesla or the Chinese as well. And so the OEMs, whether they're Nissan, whether they're Honda, whether they're Volkswagen as well, and we've talked a lot about Volkswagen, need better product at a better price. But they need also buy-in from home domestic markets as well. Let's be brutally honest about it. If you're in Europe and you're being offered a cheap but incredibly good Chinese alternative, your loyalty to Volkswagen, your loyalty to Stellantis, your loyalty to any of those other more illustrious historical marques is being tempered. And if one thing we've learned about the car industry over the last couple of years is it's great having these wonderful historical brands as well. There are some brilliant names out there as well, and I've owned a few of them in my time. But the problem is, the loyalty to those marques has been diminished. We've seen it with the Chinese consumer. We've seen it, let's be honest, with the breakthrough of Tesla. Tesla had the best product, a unique position for years. People didn't care that it wasn't one of the other, that it wasn't a Mustang or that it wasn't a BMW. So new brands can come through all the time in this industry. And that's also a challenge, as we all know, for shareholders and the companies themselves.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.